Hi, welcome to the Market Alert for Tuesday, the 19th of September 2017. Starting off with the pound, we had a buy signal to kick off proceedings Monday morning. Unfortunately, it was followed by a sell with a loss of 37 points on the first trade. The sell signal traded down to the scalp. It did go beyond it, but it took a lot longer to do so, and down to the psychological level line was only 27 points. So a loss on the day for the pound there, and that's because Carney, if we just have a quick look here, you will see that old Carney says he walks back rate hike comments from his colleague at the Bank of England that were announced on Friday that gave us the great trade to the upside. So again, no surprise really. They just don't want to they want rates up if they can help it either, because obviously they're going to have to pay more interest on the debt that they've printed, and this is going to cause some problems. So the big gun came out yesterday. He said sorry, but there's no rate hike, and that's why you see the pound moving lower. However, the market doesn't believe him because it's moving back up to the upside, and we all know that's true as well. Another pack of lies from the Bank of England governor, which has been just added to all those that he said in the past as well about everything else that he was doing with forward projections and all this other nonsense. He came up with that many when he first came over. We couldn't keep up with him. So no big deal then. If you look at the daily chart, you'll see that the pound again is moving back to the upside, and what we are looking for, if we just get rid of that there, we'll just put that in there, is a close back above the 136.15 level for prices to move higher there. So that's what the pound is looking like at the moment. News wise today, what have we got? Well, there's not going to be an awful lot going on today. It's Tuesday for one thing. Two, we've got the Fed announcement tomorrow. So these are your news items today, but it's going to take quite a bit of something to move prices to the upside, or to move them in generally, because the market is waiting for the Fed tomorrow, which we'll look at in just a moment. So everything is for the US, nothing for the pound today. So unless they can come up with something to move the market higher, they're probably going to wait and see what the Fed are going to do tomorrow and the impact that's going to have on the US dollar as well. So in the Dow, well, let's start off with the 5-minute chart. We had a buy signal to kick off proceedings. We got to the scalp, and then the market ran out of steam. And again, as I said yesterday, we're waiting for the Fed. So we got some money off the table. Helps to recoup the remaining losses on the pound for the day. And you know the market's going to go sideways after, and you see precisely that. And in the evening we just had the one trade there, but there's no point when you're waiting for the Fed and you get a good trade in the first hour of the session. The best thing to do is to stand aside and then wait, because this is what the market's going to do. Now it's moving higher. It's above the 22,350 level at the moment, but very sideways, and that's because for the reasons that I've just stated, that the market's going to be waiting for the Fed. So the new all-time high for yesterday is 22,356. This has already been tackled this morning in the overnight market, but there's no point in drawing that in to see later if it holds or not. And yes, Yellen, that's what I was going to come to. Global stocks, this is for yesterday. Global stocks stormed to record high ahead of historic Fed announcement. And the historic announcement is that the Fed's going to try and start offloading some of the 4 trillion, that's 4 trillion of the debt they have purchased on their books. So if Yellen doesn't make that announcement tomorrow, then we could see a bit of volatility increase. And it's a live meeting. It's the quarterly meeting, the quarterly live meeting. Next one will be December. So all eyes focused on the Fed and whether they're going to actually start to get rid of some of the debt. So we'll just have to wait and see what they do tomorrow. Right, let's conclude by having a quick look at yesterday's implied volatility. And as you would expect, the volatility index yesterday, the VIX, was slammed as the stock started to struggle a bit in the Nasdaq, a lot of the tech stocks. So the volatility index was hit hard, and this sent the volatility lower. This was a cue for the implied volatility as well, down from 717 down to 701 for yesterday. So again, I said we wouldn't get down to these lows, but I could be wrong here. The way this is going at the moment depends what the Fed do tomorrow, but we are down in a major support area, and I would imagine that this is still a one-off at 624. However, as I've said before, the longer this goes on, the bigger the bang is going to be, and that's fine by me. We'll just be patient and wait for things to start falling apart, which they will. Even the front page of this morning's Guardian is talking about household debt in the UK being at record levels as well. So we know it's just a matter of time before we see and revisit 2008, as the debt situation is beyond a crisis now, let alone in 2008. Right, on that cheery note, that will do it for today. Like I say, expect it to be quiet. Fed meeting tomorrow, live one, talking about offloading some of the debt on the books. Let's see if she does do that or announces that, and we'll take it from there. So as ever, thanks for watching. See you in the next one.